Welcome to this video overview of the Stockscores Active Trader course. I'm Stockscores founder Tyler Ballhorn. I'm going to walk you through what the Stockscores Active Trader is all about, teach you a little bit about what it takes to be a day or swing trader, some of the things to think about when you are assessing your performance in the market, try to give you a little education as well as inform you on what the Stockscores Active Trader course is all about. So here's the itinerary for this presentation. We're going to talk about what is day trading, what is swing trading. I'll discuss what you need in terms of knowledge, strategies, tools, process, capital. Some of the things that will help you succeed. I'll discuss a very important rule, the 80-20 rule of trading. We'll look at the economics of day trading. I'll actually show you how my strategy performs over a lengthy period of time, as well as how it performed over a single day. And then what I can do to help you get to meeting your goal of perhaps one day being a professional trader. All right, so what is day trading? Essentially, it's entering and exiting a position within a trading day. So you don't hold positions overnight. Instead, you are in cash overnight. And so in this regard, some would say, and I would agree, that day trading is less risky than longer term trading simply because you don't hold stocks overnight. So if something bad happens in an overseas market and the overall market, really gaps down the following day, you don't get subject to that drop. The risk of day trading, however, is that you can get emotional. It's a faster moving thing. You are trading stocks that are moving quickly. And so it's very important to focus on the stocks that are moving abnormally. We'll talk about that in a moment. And focus on stocks with good liquidity. I am a strategy-based trader. I don't trade based on gut feel. I trade based on rules. It's not always been that way. When I started trading, I tried to be smart and use my head. But over time, I've come to realize that being smart and using my head is best left for when I'm developing strategies. Once I have the strategy developed, I test it, I prove that it works over a large number of trades, and then I trade the rules. I don't expect to be right every time. I judge my performance over a large number of trades, and you'll see in a moment when we talk about expected value and equity curves, what it's really all about is, does the strategy make money over a longer period of time, not one trade at a time, but over a large sample size. Now, my typical trade is something like this. I use my own indicators. I don't use other commonly used technical analysis indicators. I believe it's important to have an edge in the market. To have an edge, I have to do things that other people don't do. And so my approach to the market uses almost entirely my own algorithms and methods and that sort of thing. And one of the things that I do is make those available to my students, a small number of people every year. I don't teach a lot of people because I don't want a lot of people to do what I do. So one of the indicators that I like to use is something called the message candle. If you look really closely at the chart you see on screen, you'll see some white dots. There's one there and there's one here. They're a little hard to see. You might have to pause the video to really look for them. But those white dots are something called a Stockscores message candle, and they help us to identify entry points. We also use what I call a pivot trend line. Again, my own indicator that I have created for this program, which you see here, called TradeStation. Now, I want to say that I have nothing to do with TradeStation. They're a separate company. I license or I subscribe to their software, just like many of my students do. You don't have to use it. I have some alternatives to it, but what is important is that I've created my own indicators for TradeStation that give me that edge in the market. One of the other things that I do when I'm day trading is focusing on stocks that are trading abnormally. This is actually an ETF or an ETN, and you can see that the volume on this particular day was much higher than the previous day, and that is one of the key things that I look for. I've got algorithms, again, to identify those, and those algorithms can be made available to you, my student. Once you have those, you have a specific process. We'll talk about that in a moment. But in this case, the entry point was right here, and stop loss point was down in here. And these lines that you see above are multiples of risk. So if you risked $100 on this trade, and it finished the day up here at 11 to 1 RR, that means your $100 of risk made $1,100. If you risked $1,000, it made $11,000. Okay. How much you risk is dependent upon what you are comfortable with. You have to decide that for yourself. And I always tell my students, when you start trading, you should risk $0 because you have to practice, you have to learn. My job as your teacher is to teach you how to trade. I then have a tool, which I'll discuss in a moment, that you can use to practice trading. And once you're good in practice, then you're ready to start trading, and you should start with a low amount of risk to begin and then slowly increase your risk as you are successful so that you don't risk losing a lot of your capital. Now, there's always going to be risk in trading, but if we can minimize that by being smart in how we take risk, we can be around for the long haul. Now, swing trading is another style of trading I like to do. In this case, we are entering and exiting positions within 2 weeks. Again, we're always focusing on stocks that are moving abnormally. Most stocks, most of the time, are not worth trading. But every day there are a group of stocks that are trading on some significant fundamental change within their business. And that is what I, as a trader, look to capitalize on. So I'm always focusing on the stocks that are moving. I don't want to focus on the same stocks day in and day out, because most of the time these stocks are boring. They don't make big enough moves to justify my time. Now, as always, I want to focus on stocks with good liquidity. What that means is that these are stocks that are trading actively enough that I can get in and out of those stocks fairly quickly without a lot of slippage, and ultimately that leads to a higher overall profit. Now, I, again, strongly recommend strategy-based trading. I don't trade based on what I hear about on TV or what I read about in the newspaper or what I see on some chat room on the web. I trade based on rules, and those rules are tested over thousands of trades to identify a set of rules that work consistently. Now, this is always based on history. There's no guarantee that what has worked yesterday will work tomorrow, but I find that as I test them well enough, they tend to work well over time. So a swing trade might look like this. This, instead of that last chart we looked at, was a 2-day, 2-minute chart. This chart that you see here is probably a 10-day, 13-minute chart. And again, you can see some little dots on this chart, and I know that they're hard to see, but bear with me. If I circle it there, you can see the pink dot right there. That pink dot is something called a Stockscores action candle. And it is one of my key indicators for identifying swing trades when I'm using TradeStation. And what this shows me is a stock that is behaving with abnormal price and abnormal volume, something that we can measure statistically and something that a computer is very good at measuring. And so what we're trying to do is identify that stock in a timely fashion and hold it for a number of days. Now, this instance, the buy signal was here, and we always judge things in terms of reward for risk. Our exit signal on this one was right here. And so that represented a 12 to 1 reward for risk ratio. That means if you risked $100 times 12, you made $1,200. And that's before slippage and commissions, but it's going to be something close to that. Now, unlike day trading where you're in and out of the position within the day, in this case, you would have held this stock for 1, 2, 3, 4, 5, 6, and it is on the 7th day that we had our exit signal. We use these lines that you see on the screen to help us know when to exit by trailing a stop loss point, looking for a close below a line after one higher has been achieved. And there's certain rules that I teach in terms of how we use those lines. So what you need then is knowledge. If you want to learn how to trade, you need the core skills that can help you trade successfully. To begin with, you need the very basics. What is a buy order? What is a sell order? You know, the things that maybe I take for granted because I've done this for a long time. But if you're just starting out in trading, these are the basic skills that you need. And so that's something I can teach you, although we don't certainly stop at the basics. We go to the very high range of knowledge to get to the point where you can do exactly what I do day in, day out and have been doing for the last 27 years. We need some methods for analysis. We need to know how to manage risk and manage our money. Our number one goal for the people that I teach is capital preservation. We don't want to risk more capital than we need. We don't want to suffer big losses to our capital base. That puts us out of business. So it's real important when I teach people for them to follow my rules of risk management, money management, slowly increasing your risk as you gain experience and success with the strategies that I teach you. I'll teach you how to develop strategies. Not everyone likes to do that. I love to do that. As your teacher, I will give you the strategies that I have developed, but I'll also show you some of the skills that you need if you want to develop your own strategies down the road. And then, of course, we just have to talk about the mechanics of trading, how you actually play out the processes to identify stocks in a timely way, the tools that you use, the software that's available. All of those things make up the knowledge area. Then, of course, you need strategies. Now, you can create your own strategies. I will tell you that it is an expensive and time-consuming process. It is not uncommon for me to spend 1 or 2 years developing a strategy. And so even though, the rules for the strategy could be scribbled on the back of a napkin, and they're pretty simple, the amount of work and testing that goes into developing those rules is significant. We need the rules not only for when to enter, but when to exit, how to size and manage our positions. They have to be well tested across different market conditions, across different types of stocks, and really understand how they work. And you as my student has to understand the work that goes into that and understand what is behind the rules. Because if all I do is give you the rules, you probably won't know how to put them into action properly. And so when I teach, I don't only just teach the rules, I teach what's behind the rules, some of the theories, so that you can understand why they work, and that way really apply them in the market well. Ultimately, as a strategy trader, as an algorithmic trader, I am using statistics. I'm using data, and that's why I say there, you need to appreciate the power of statistics. If a stock that began with the letter A went up 20% today, that does not mean that every stock that starts with the letter A is going to go up 20%. That's a foolish thing to think, but believe it or not, some people take that logic and apply it in their trading. They'll say, well, the last stock that I bought went up because it was a biotech stock and it was under $3 and it traded some really strong volume at the open. The problem is your analysis is based on one sample, the sample size of one. And when we do good strategic statistical analysis of trading rules, we have to test them over hundreds, if not thousands of examples so that you can see what really works across different market conditions. And that is what I do when I develop strategies, and I will make my strategies available to you, my student. Now, of course, we need tools. Computing has come a long way. Computers are now a huge force in the market, and you have to take advantage of their power in terms of doing fast calculations, in searching through large amounts of data. So there's a couple tools that I use. Stockscores is my website. We use that mostly for position trading, swing trading, and it can be useful for creating our day trading watch list. But when we are day trading and perhaps swing trading to some extent, what is also important is timeliness. And that's where a program like TradeStation comes in, using my proprietary indicators for TradeStation. Now, again, I'll reiterate, I don't get paid by TradeStation. I have nothing to do with them. I have no partnership with them. I subscribe to their software. I've done so for over 10 years. I've written all kinds of code for TradeStation, and I make it available to my students. If you want to use TradeStation, you have to go subscribe to it or open a brokerage account with them. They'll give you their software for free if you have a brokerage account with them. But for me, I'm a Canadian. I'm not able to open a brokerage account with them because there's rules about Canadians opening accounts with US brokerages. But anyway, once you have it, I send you my indicators. Those dots that you saw on the chart, there's a whole suite of indicators that I have to help you identify entry points. And we'll go into that a little more in a moment. Now, there's other real-time charting programs out there. They don't accept the indicators that I have created. And so if you want to use my indicators, I recommend using TradeStation. If you want to take the theory of what I will teach you and adapt it to other software programs, you can do that. I've had students do that. I think it's a bunch of extra work when you could just use TradeStation. But we also have another product now called Active Trader Live. Now, Active Trader Live essentially gives you the ability to watch me trade through the day and listen to my robots, my algorithmic trading engines, identify entry signals in real time as they happen. And so in that case, you don't need TradeStation. You can subscribe to the Active Trader Live service, and as the signals come out, you're going to get an alert. It'll say strategy alert, or you'll hear a little bell sound, and you'll see my screen, and you'll hear my voice for the first hour as I build the watch lists and discuss what I see going on in the market. And then for the rest of the day, you just let the robot give you the signals, and then you can take a look at the stocks that are giving the signal and determine whether that's a trade you want to take or not. And that's something that I find very, very powerful, because the computer is so much better than we humans are at catching these trades on time. I used to do it manually. The market has become more competitive. It's faster moving. And so now I utilize computers more than I ever have to identify the real-time entry points and exits. You need to have tools for order entry. That's from your broker. If you're going to trade, of course, you have to have an account with a broker. They're going to give you the tools for buying and selling. And then I like to do post-trade analytics as well. I use Excel a lot. When I teach you, you'll see that I use Excel a lot. I encourage people to keep a trading journal. Microsoft Word is a good way to do that. Not the only way, but a good way. Next up, we need process. We need a step-by-step plan for implementing a trading strategy. That plan should be very mechanical, step-by-step, logic-based, not much room for interpretation by humans, because humans are emotional. We make silly mistakes because of our emotional attachment to money. What I've tried to do, and really what I do today more than ever before, is really take the human judgment out of it. It's mechanical, it's efficient, it removes emotion. It's if these rules are satisfied, ding ding, the bell goes off, there's the entry signal. And that is how the best investors and traders in the market today are beating the market. The largest hedge funds that are making money, and most hedge funds, by the way, are not making money, but the ones that are really successful are heavily dependent upon algorithmic trading, because that's the world we live in. And so if you can't beat them, join them. I have become more of an algorithmic trader. I've always been somewhat of one, but today the level of computer involvement in my trading is high. Doesn't make it difficult. It actually makes it a lot simpler. And some of the tools that I'll give you will help you to do that. So the process then, if I'm day trading, is I begin the day by building my watch list of stocks. Every day I trade a different list of stocks. It's anywhere from 15 to 50 stocks a day, typically, that I'm watching. And those stocks on the list have triggered something called an action candle, or another indicator I have called expected abnormal volume indicator. Again, these are my own indicators. I give them to you, my student. They're for TradeStation. If you don't want to use TradeStation, you don't have to. You can subscribe to my Active Trader Live service. It's actually cheaper than subscribing to TradeStation. From that list, we monitor and assess the stocks to look for the entry signals. So the computer does most of that work. The computer will identify these message candles in real time, like down to the microsecond. When they trigger, it'll flash an alert. You can then go take a look at that chart and determine if the entry signal is one that you like and take it or not. I take every entry signal that I get if my rules are satisfied, but some people still like to do a little interpretation of the chart. That's certainly okay. There's nothing wrong with that. You'll trade less than I will probably, but sometimes that can increase the quality of the stocks that you trade. Then once you're in a position, we simply monitor our holdings for exit signals. We take losses some of the time. We use stop losses. So if the stock falls down to our stop loss point, we get out, we move on. It's important as a trader to minimize the size of your losses so that your winners can outweigh your losers. And so risk management really comes in there on the monitoring of our stocks for exit signals. Now, of course, I can automate all this for you. You don't have to do the work. I will do the work for you for $195 a month. I will tell you what the watch list is, all the alarms that will sound. I'll give you my comments in the market. We will go over the previous day's trades each day. We're going to always do things to help you learn. That's all done in the first hour of the day. And then for the rest of the day, we just let the computer monitor our watch list for entry signals. You're watching my screen in real time as it happens and see things as they come through. Now with the swing trading process, we can use TradeStation or we can use Stockscores. We've got different approaches for each platform. Using TradeStation, we typically look at 13-minute charts. If we are using Stockscores, we'll favor more the 30-minute interval. We're always looking at the daily for confirmation of our entry signal. And again, it's just a set of rules. You take the rules, you learn them, you understand them well, and you apply them. We're always looking at what the reward per risk potential is of the trade before we take it. Make sure that it makes a good sense to take that trade. We enter our positions, and then we monitor them for exit signals. We're, in the case of swing trading, maybe monitoring those stocks for 1 or 2 weeks. As they move, we're going to move our support price up and our exit prices higher. Or, of course, we also can short sell. So in that case, we're doing the opposite. But ultimately, you take the entry signal, and then you have to look at your stocks. With swing trading, either at the end of every day, early in the morning, or if you really want to be active, you can look at them every half an hour or so for a signal to move your exit point up or down. Finally, what you need is capital. As a general rule for day trading, you take your risk tolerance, so how much are you wanting to risk per trade, and multiply that by 200. So if you want to risk $50 a trade, that's your potential loss plus commissions and slippage, you'd be looking at $10,000 of capital. Now, lower price stocks need less capital, high price stocks need more capital. So if you're trading, the Amazons and Facebooks of the world, then this number 200 can go up to 300. If you're trading, small biotech stocks under $10, maybe mining stocks, lower price stocks under $5 or $10, this can go down to 100 times your risk. So again, if you're wanting to risk $100 times 100, if you're trading the small cap stocks, that's $10,000 of capital. If you want to trade the big name stocks, then you're going to multiply that by 300. That's $30,000 of capital to trade those larger companies. Now, one thing you can do is the larger stocks, the $100 stocks, they tend to have options that trade on them. And I do have students that will use options to trade those big name companies, those expensive stocks, which really lowers your capital requirement. I personally don't trade options much, if at all, but I have in the past. And I know that you can really leverage up your returns as long as you have a good understanding of how options are priced and that sort of thing. Our number one goal is to preserve our capital. And so I tell all my students, I don't care if you have $10 million to invest, start with $0 of risk. I can teach you in videos and books and all the ways that I teach people, but there's just no replacement for practice. And I will hold your hand through the practice process, but you got to practice. And so why risk capital when you're learning? Why not do it in a simulated environment where you have no risk? And so I have created a trading simulator. It's at tradescores.com. It's free to use. Just go there and you can register for free and you can practice trading on it. And once you're successful in a simulated environment with no risk, that's when you're ready to start trading, but with a small amount of risk. And when you've made money with a small amount of risk, then you can increase your risk a little bit. And you've made money at that level, you can increase your risk a little bit again. And by doing that, two things happen. One, you don't risk a lot of your capital. Two, you also desensitize yourself to risk to really take the emotion out of it. Now, if you don't want to use TradeScores to practice trading, Excel is another way. You can just write it down on a piece of paper. Write down the trades that you find and track your results over time. But I have to stress, practice first. Why risk money until you've proven that you know what you're doing? If you have some failure, then you're going to decrease your risk. Decrease it down to 0 if you suffer some losses over a bad week, perhaps. Maybe you're doing something wrong. Decrease your risk. And if you need help, you can ask me. Trading is simple, but it is not easy. And I really encourage people to walk before they run. As I said, what I do every day is really quite simple. Sometimes that makes me laugh how simple it is. But figuring it out took me 8 years. And I've been trading for 27 years, and I'm still always trying to improve my strategies, my processes, become more and more sophisticated. Doesn't mean it's more complicated, but using more powerful tools and that sort of thing. And so to be a good trader, there's no replacement for practice. It takes good focus. You have to be determined. It's almost like sports. If you want to do well at it, you got to want to win. And it takes discipline. If you're a gambler, you're not going to be a successful trader. You might get lucky in the short term. I've seen people make a lot of money on a hot run of some hot area in the market, and then they give it all back later on because they essentially approach the market like a gambler. I do not gamble. I trade rules. I trade rules that I've proven to myself work, and if they stop working, then I work on the rules, but I don't ever trade on gut instinct or hunches or what someone told me. I'm trading on math and data, and that's really important to understand. I want to talk a little bit about the 80-20 rule of trading, because one of the things that I don't know that everyone recognizes is that trading is not like a normal job where you go into your desk, you work, you get paid by the hour, perhaps you get a salary. At the end of the month, you get the same paycheck month after month after month. Trading is not like that because market conditions vary. 80% of your money will be made 20% of the time. It's not uncommon for me to have 3 or 4 days where I make a little, lose a little, more or less just break even, and then have a big day where I make all the money for the week. And out of 10 stocks that I trade, maybe 3 or 4 will be losers, 3 or 4 will be small winners. They kind of balance each other out. But then I got 2 big winners that pay me. And first of all, you have to understand that. Very important to understand that. And the reason why is because so many traders that I see don't get that. And the result is they don't let their winners win, and they don't minimize their losses when they're wrong. You got to allow those 1 or 2 out of 10 stocks that make you the big profit to make you the big profit. And what happens is someone will be up, $1,000 on a trade, and they'll sell it just because it feels good. And then that trade goes on to make $3,000 if it had not been sold. You got to remember that big trade, that $3,000 winner, has to pay for the little $100 and $200 losers. And so if you approach the market with the understanding that 80% of your money is made 20% of the time, you're well on your way to getting what a lot of people don't get with trading. It's not going to be the same every day. You're going to have dry spells, and then you're going to have spells where it just feels like it's so easy and the money happens fast. And then right after that, it's going to be a dry spell again. And you just have to be there grinding it out every day, waiting for the big days, waiting for the big winners that pay you for sitting there every day. It's very streaky in trading. So this goes into now the economics of day trading. We always judge our performance in the market using reward for risk. So if I risk $1 and I make $2, I've made a reward for risk of 2. If I risk $1,000 and make $2,000, I've still made a reward for risk of 2. When you consider that, and then you consider probability, you can come up with expected value. If I risk $100 and I've got a 70% chance of making money, then that's worth $70. That means that my $100 also means I could lose by 30% chance. That means I've got a minus 30. So I've got a 70% chance of making 100. I've got a 30% chance of losing 100. The expected value of that is $40. $70 minus 30 is equal to 40. That expected value is positive, and therefore that would be a strategy that I would want to trade. So that's this concept of expected value, and it's really how I always judge the success of any of my strategies. If I take a set of rules, maybe there's 5 rules for when to buy and 3 rules for when to sell, and I test them over 1,000 trades, what I want to know is how often did it make money? How often did it lose money? What was the average winner? Was it $400? And the average loser was $120? And there was a 65% chance of this happening and a 35% chance of that happening. From that, I can determine what the expected value is. In this case, it's going to be positive, and therefore it's something I want to trade. Now, once I build out my set of rules, I will test them over a large sample size of trades, thousands of trades. And I can then develop an equity curve. So an equity curve starts with a big spreadsheet that I build. So here's an example of one. And I'm calculating the net gain or loss on each trade each day. So you can see here on the May 17th, there was quite a few trades, probably 30 of them. Well, actually, I shouldn't say that. These weren't all trades. Some of them never triggered a trade. Some were simply on my watch list. So that's my watch list. Then some trigger a trade. I collect the statistics of it, and then I can accumulate the gains and losses day by day over thousands of trades over a number of months, let's say, and create what is called an equity curve. So this is an equity curve for one of my day trading strategies, something called an intraday pullback play. From May 2nd to August 12th, so what's that, May, June, July, so 3.5 months. So we start over here in May at $0 of profit, and this is using $1,000 of risk, okay? So if I'm risking $1,000 by May 11th, that strategy was up $50,000, $100,000 by the start of June. Don't worry about the numbers because most people won't ever start trading with $1,000 of risk. What I want you to notice, and this is what's really important when you're looking at equity curves, if you ever look at them elsewhere, is whether the line is really choppy or whether it's smooth moving up from left to right. And this one's pretty smooth. You can see that I can draw a line across the bottom and it's pretty much a linear upward trend. Now we had periods when things were quiet, like here. It didn't really lose money, but it just kind of grinded its way sideways. Summer month, not unexpected. First month of the quarter, not a lot of things going on the first month of the quarter. So that's typical of any strategy, I would say. And then we had a period when it was really rocking and rolling, and that was earnings season, lots of action going on, and the strategy did well. And so you'll always see that. Slow periods, strong periods. Here's a pretty good strong period. Here was a slow period. So remember, it's not the same every day. It can go a week with no action, and then all of a sudden you get 2 days where you make enough money to justify your whole month. So that's how an equity curve looks. And this is my actual equity curve from one of my day trading strategies called an intraday pullback. Now, here is a particular day along that journey. I just pulled one of the days. On that particular day, there was 36 stocks on my watch list, which I created in my active live webinar. So there's people watching. I gave them the watch list. Here's the 36 stocks. There was 8 stocks on that list, which I call my preferred stocks because they met certain criteria. Of those 8 stocks, 8 triggered a trade, so 8 out of 8. 7 of those trades were profitable. 1 was a loser. And on that particular day, I was risking $275 per trade, which is actually lower than I normally do. But for whatever reason, I was risking a little less. And by the end of the day, this is real money, real results. I had earned a 21 reward for risk ratio for a total profit for the day after commissions and slippage of $5,777. And here you can see the actual positions as well as the profit and loss for each. So there was the one loser and then the different winners there as well. So when you're watching me in Active Live, which is one of our services, you're going to watch me create the list. You're going to hear my discussion of the day, and then you're going to just monitor the webinar for the real-time signals. It's live. You watch it from your screen anywhere that you have access to the internet. I'm streaming it from my office, and I only talk for about the first hour because there's not much to talk about after that. And then we just let the computer monitor our list for these automated instant trade signals. So I'm doing all the work. Some people like to do the work. Then you can subscribe to TradeStation. I will give you my indicators if you are my student so that you can apply them with TradeStation. But if you'd rather not do the work, you'd like me to do it, then you can subscribe to Active Live. As I said earlier, it's $195 a month. However, it is only available to people that take my Active Trader course. I do not want thousands of people in my chat room or in my webinar, because if there's too many people, it takes away the opportunity. I've heard of, day trading chat rooms on the web that have thousands of people in them, and I have no idea how anyone can make money in that, except for the guy running the chat room, so charging a fee for it. If you're going to beat the market, you have to be one step ahead of the crowd. If you are in the crowd because you're in a chat room with 2,000 people or even 500 people, how can you possibly be one step ahead of the crowd? I just don't get how these things can work, but maybe I'm missing something. I'm not sure. Anyway, our Active Live service is pretty exclusive. You have to be my Active Trader student to qualify, and then you pay the monthly rate of $195. It's important to know that that's Canadian dollars. For those who think of things in US dollars, at least right now, it's there's a bit of a difference there. The Canadian dollar is worth less, so it's actually a little cheaper. So here's a little video on how Active Live looks. So this is the screen that you would see during the trading day. I did a recording of my screen during the day. What you've got here are different areas of the screen. This is our open positions over here. We don't take every position. This is every alert that is sounded.
Strategy alert.
And there you can hear how the alerts come through. You see my screen, and there's these little signals here that you're watching with this IPB long. When there's an actual alert, you'll hear strategy alert. You'll see it show up at the top line of this. You'll also see these alerts sound off down here. It's all real time as it happens. It's all driven by my big, powerful computers in my office. When you get an alert, then there's some other things we do to assess it, because as I said, we don't want to take every single trade. There's some ways we can prioritize which ones have the best potential. And that's something I teach you in the first week of the Active Live service. This is our watch list. We have longs and shorts. So this is the long side. This is the short side. And then I'll sometimes discuss the charts a little bit. So I'll be able to bring those up and show things. You can see there's little dots in here. Those are my action candles. There's little white dots on there. There are these risk reward lines that all get drawn automatically. It's very, very sophisticated. I've never seen a chat room type service as sophisticated as this. And again, it's pretty exclusive. There's not a lot of people using that, and that's the way I like it. So how do you become a day trader? You can do the path that I took, which is develop and test your own strategies. As I said, it took me 8 years before I was really good at that. And I paid a lot of tuition to the college of trading, as it were. You can purchase the Stockscores Active Trader course and learn from my 27 plus years of experience. I've had students tell me they've spent tens of thousands of dollars on education from other trading educators. They then took my course and they said that far and away what I offered was better than anyone else, largely perhaps because there's not a lot of fluff. It's based on data. It's based on statistics. I'm using my own indicators that are proprietary, so they're not things you're going to get elsewhere. I had one person tell me that he spent over $60,000 on education, taking all these different courses, and ultimately is using the Stockscores approach. So, you don't have to spend tens of thousands of dollars with me. My prices are far less. We'll talk about that in just a moment. Now, the way that I teach is online through my Stockscores Education Center. And there's other videos in this on the website on stockscores.com that will show you the Education Center. I encourage you to go look at it. Just go to the trader training area, go down to the education section, and you can look at it there. But within that, there are the foundation lessons, which are kind of the theory lessons, the things you have to understand before you can trade my strategies. There's a written lesson, there's a video, there's an assignment, and then there's a test. And there's, I don't know, a dozen or 15 different lessons in the foundation. Once you understand that well, then you are ready to understand my strategies. And that's where the investor and active trader areas come in. So there we have a written lesson. We have a video that explains that. We've got some videos that aren't even the strategy rules. It's more the mechanics of applying the strategy, things like how to use TradeStation if you're going to use it. So there's a variety of lessons in there. There's no assignment or test in those sections because ultimately the test is, can you make money trading the strategy first in my simulator and then with real money? So that's the test. And I'm there to help you as you work on your journey towards becoming a trader. So I have two courses. The investor course gives you access to all the foundation lessons. It gives you access to my investor strategies. It gives you access to my investor market scans on Stockscores. You get email support from me as long as you are a member. With your course, you'll get a 6-month membership to our tools and to my support, which you can renew for $300 a year. At least at the time I'm doing this video, that's the price. Maybe we'll change it one day, but it's been that way for 10 years. So far, no price changes there. The Active Trader course, you get the foundation lessons again. You get the investor stuff. You get Active Trader now as well. So you're getting everything in the investor course, plus the Active Trader strategies, plus access to my Active Trader market scans, plus my proprietary real-time indicators for TradeStation, if you decide to use TradeStation. If you're going to use my Active Live service, and you don't really need it, but I'll give them to you. You get email support from me as long as you're a member. 6 months membership is included as well. And if you want to renew, again, $300 a year to renew. Now, you don't have to spend tens of thousands of dollars on education. The investor course is $2,495. The Active Trader course is $3,495. That's Canadian dollars. If you are Canadian, you're going to pay GST, which is our tax in Canada as well. But if you're outside of Canada, there's no taxes. If you want to upgrade, let's say you took the investor course and then 2 months later you wanted to take the Active Trader course, you pay the price difference. So it's $1,000 difference, plus you pay a $250 upgrade fee. So it's $1,250 to upgrade from investor to Active Trader. You can do that at any time. If you want to save the $250 upgrade fee, then start with the Active Trader course. If you want to, space your learning out over time, do the investor, and then when you're ready and you're willing to be an active trader, not everyone wants to be an active trader, then you can do the upgrade for $1,000, $250. So how do you register for the course? The page where this video is hosted, stockscores.com/trader training, will give you a lot more insight into what's involved in the course, but also the links to register for the course. So lots of information on the Stockscores website. I really encourage you, if you ever have any questions, to email me. My email address is there. That's my personal email address. It's not answered by a bunch of minions. tylerb@stockscores.com goes directly to me. If you want to follow me on Twitter, it's @Stockscores on Twitter. I put out lots of little tidbits about trading on Twitter. It's a nice way to get some free thoughts. And I also have a YouTube channel where each week, as a minimum, I put up one video, sometimes more, on different topics. I have my weekly market analysis, trades of the week, that sort of thing. So subscribe to me on YouTube, subscribe to me on Twitter. It's free, why not? And you'll get updates as soon as I put things up fresh and new. Well, that has been a quick overview. I hope it's quick enough. It's still a fairly involved process. But that's an overview of the Active Trader course. And there's another video on the Stockscores site that goes into more of the details of the investor course. If you have an interest in that course, certainly watch that video as well. Check out all the videos I have. There's lots on my YouTube channel, stockscores.com. That's about all I have to say. I hope you've enjoyed the presentation. Hopefully it was somewhat informative. I'd love to help you learn how to trade and ultimately make you trade well. Thank you.